in today's session. It's a closing session that's going to have the final say. So we've got a fantastic session which is going to conclude the corporate agenda for today. It's on the BSE or the Bombay Stock Exchange. And I'm sure all of you have heard of the Bombay Stock Exchange. Some of us were able to see it on our heritage tour last evening. What you may or may not know is that the Bombay Stock Exchange is not just India's oldest stock exchange, but also Asia's oldest stock exchange. It was set up in the year 1875. We're very privileged to have the Chief Business Officer of the BSE today with us, Mr. Sunil Ramrakhiani. He's going to lead today's conversation. He has over 3 decades of diverse experience in Indian financial markets in various strategic and leadership roles. He's worked across exchanges, bank treasuries, broking, prop trading, high-frequency trading, and wealth management. In his previous roles, he's been instrumental in initial stages of setting up alpha grep securities in India, rolling out algo trading strategies, and prop trading in various organizations. He has experience of building various businesses from the ground up and has worked across organizations like ICICI Bank, NCDEX, ILNFS, InvestSmart, Way2Wealth Securities, and Quant AI Technologies. Oh, that's quite a bit. Amazing. Today, Mr. Ramrakhiani will be speaking with us on capital markets and their role in building a developed India. Please join me in welcoming Mr. Sunil Ramrakhiani.
Thanks for the warm introduction, and thanks for inviting BSE representative to come and present the capital market story in India. So before we begin that, what I will request is, can we play a 2-3 minutes? AV is there, which is on completion of 150 years, we came out with the AV. Being the oldest stock exchange in Asia, you should know the history of the capital markets in India. May I request the team to play out the AV?
BSE, the Kalpavriksha of the Indian capital market, is completing its 150 years of service to the economy. The oldest recognized stock exchange in Asia, BSE has been the leading beacon of the multi-trillion-dollar Indian stock market, one of the largest in the world. Conceived under a banyan tree, the Bombay Stock Exchange was first formed as the Native Shares and Stockbrokers Association in 1875. Through reforms, it supported the growth of corporate India and freedom movement of the country.
BSE's resilience lied in its ability to continue to remain relevant and contemporary. As early as 1936, BSE pursued hard with Government of Bombay and aligned its listing requirements with that of London Stock Exchange. In 1956, the first important capital market regulation called Securities Contract Regulation Act was enacted, and BSE became the first recognized stock exchange of India, leading into a new era.
What Bombay Stock Exchange has done is to provide, in those very early days, the foundation for the growth of business and industry. Without a proper functioning stock exchange, I do not think we would have, as a country, reached where we are today.
To provide a capable performance benchmark in the country's capital market, the exchange launched BSE Sensex in 1986.
The oldest index of India is considered the barometer of the performance of India's economy.
1990s saw economic upheaval and strife for the country in form of balance of payment crisis and terror attacks.
We were all inside and the entire center glass of the building, it fell. We all got the lines temporarily up and business was as usual on Monday. We want to show the terrorists that we are unstoppable.
BSE became unstoppable as it became the first exchange to adapt to transformative technologies of trading, while setting up pillars for the new capital market.
Online trading, trade guarantee system and depository system. These were the 3 main pillars of having the modern markets that you have today.
The reform process witnessed the emergence of multiple new sectors. BSE continued to support capital formation in the existing and new sectors and ushered in a new era of vibrancy.
Under the new leadership, with its agile customer-centric focus, new cutting-edge technology, product diversification, and global integration, the Kalpavriksha of Indian capital market is gearing up for Viksit Bharat.
India now has a very well articulated vision of Vikshit Bharat under the leadership of the Honorable Prime Minister. I'm confident that BSE, under the guidance of our Honorable Finance Minister, will be the key catalyst in fulfilling the collective vision of this new India.
BSE continues to serve the emerging Viksit Bharat in its efforts of cattle formation, wealth creation, and economic well-being. Indeed, BSE is the Kalpavriksha, the wish-granting tree, which provides not only shade but also prosperity, abundance, and wealth.
As more and more Indians' aspirations for wealth gets fulfilled, the Kalpavriksha of India's capital market stays rooted in its strength of timeless wisdom, resilience, and regeneration. Today, as the institution celebrates the privilege of partnering the nation in its growth journey, its new journey has just begun.
Thanks for playing the AV. So you got the background history about the capital markets in India. And so what we are going to do in next 15, 20 minutes in terms of what is happening in the Indian capital markets, some statistics which are more relevant for the today's discussion, I'm told is a kind of audience what we are going to hear. Having largely long-only investors, somebody are looking at investing in India, and I think the topic itself is accessing India. And that's something is the background to the capital markets is the BSE. When you talk about capital markets, is BSE, that's where journey of the Indian markets have begun. So what we're going to do is like say 4-5 slides, maybe I'll try to deliberate upon some statistics, which are the way things are changing in the Indian markets. Our vision of our Prime Minister 2047, when we are going to complete 100 years, we want to be developed India. That's what in Hindi, what we say is a Viksit Bharat. That's what is the ambition goal. We already became the 4th largest economy, soon going to become 3rd largest economy. Those are the numbers I'm sure the previous speaker must have given you a background about that. So I'm not going to touch base about those numbers right now. What I'm going to touch base about the real microstructure changes which is happening on the Indian capital markets and Indian markets per se. Maybe we can move to the first slide. Can I use this or no? Yeah, so these are the institutional flows. I know from beginning we have been talking about the changes in the flow structure, what is happening to the Indian markets. You are seeing the orange bars, which are just catching up compared to the blue bars, which are becoming negative. Orange is India and blue is foreign portfolio investors. That is a real change which is happening in the last couple of years now, calendar years in particularly. Interesting some statistics. You just add up the math and all that stuff. What happens is, I was just looking last 6 years, $180 billion worth of money has come from domestic institutional investors, and exit from the domestic markets for the FPIs is $100 billion. So that is the kind of a counter match which is happening from the Indian flow. I was looking at some statistics again. March quarter, one of the published data by the other exchange was first time in the history of the capital markets, domestic retail participation, domestic retail holding is larger than the foreign institutional holding in the Indian capital markets. And how it is coming, that's we are going to see in the next few slides. This is where the real change is happening, mutual funds. So next few slides, I'll just show you what is happening on the Indian capital markets now. Mutual fund, which is the first entry point for a lot of investors, and systematic investment flows, which are there happening in India. And interestingly, what I share with you, pre-COVID and post-COVID kind of a structure, ease of doing a transaction in India because of the payment integration which is happening. We are the largest actually in terms of the payment industry, in terms of number of transactions. We have surpassed multiple times of so many other countries in terms of the daily transaction flow which happen onto the payment industry space. And second order effect, third order effect, fourth order effect is coming to the capital markets. That's where a lot of sandbox was created by the regulators in the past to use payment interface, and also the fintech in the capital markets has come together to bring the ease of getting the investors to the capital markets. So some numbers which are staggering, what we are looking at, and where does the BSE plays a role into that. BSE has got one platform called Star Mutual Fund Platform. This is a term which will be used often as you keep on hearing much more in the market down the line. That platform is the largest in terms of the bringing the flow of the investment into the AMCs. So that is a capital markets platform which provides all the asset management companies. There are some 40 AMCs which are integrated on that platform with the 70,000 distributors. And these distributors are not small. These are distributors like banks, bank distributors. It can be HDFC, ICICI. It can be largest of the largest like Grow, whose IPO is coming right now. Paytms of the world, Zerodha of the world. All these are called single distributor for us. There are 70,000 distributors in India which are integrated on that platform. And these 40 asset management companies are able to source money through that platform, which is called Star Mutual Fund Platform. More than 88% of the overall transactions which are coming through the in the mutual fund market is coming through that platform. That is the kind of role which is being played by the BSE through a Star Mutual Fund Platform. This is again just touching base on the history again. 150 years old, we don't need to introduce again. That's something we, just to add here is, we completed 150 years on the 9th July this year. And there was a commemorative coin which was inaugurated by our finance minister, Madam Nirmala Sitharaman. Interesting part what we have seen is, like say, over a period of time, the member network which has been from the hinterland of the India, from the different cities of India, we have got some 1,200 broker member network right now. And that is servicing to more than 220 million investors. But again, this number is some lot of duplication because one investor will be having multiple accounts. But the total number of unique investors in India is now 120 million. Again, pre-COVID, post-COVID story. I'll come to the next slide in that case. Co-location, which is the most important backbone for any exchange to thrive in the today's high-end technology world. You require a very strong backbone, which is a technology. And for that, technology what we use currently at this stage is one of the world-class, the Deutsche Bose T7 technology, which is one of the most scalable technology. I'll touch base on that as well. What is happening in terms of the flow of orders which is happening is surpassing a lot of European exchanges and a lot of US exchanges in terms of the order flow which is happening onto the Indian capital markets. So that T7 technology which I was trying to touch you right now at this stage is, when we started 3 years back, you saw Mr. Ramamurthy was MD CEO when he joined the exchange. At that time, total capacity what the exchange could handle in a day was only 100 million orders in a day. That was the maximum capacity of the trading engine what we are using at that time. From 100 million, now we can handle in a day 18 billion orders in a day. You can think about it. 100 million to 18 billion orders in a day, we can handle that. And we already touched the order flow of 8 billion orders in a day on our expiry days of the derivatives contract. You can see about the technology scale up which we are saying, that 8 billion orders what we are handling at this stage is not even handled by the exchange which has produced this technology. So you can think about the kind of a flow of order, flow of demographic change, flow of the capital market, new demographic which is happening on the Indian markets right now. Then comes the clearing corporation, another most important pillar for any kind of exchanges. Globally, we have seen that we have got independent clearing houses. So are the independent clearing houses, but they are a subsidiary of the exchanges. There again, where we just started journey 3 years back, at that time, exchange was holding only, clearing corporation was doing only 5% of the overall clearing trades happening on the Indian markets. Now from 5%, we already reached 25% of the overall trade volumes clearing happening to the Indian Clearing Corporation currently. So there's been multiple pillars which have gone up even with the incremental kind of size of business what we are talking about at this stage, which is happening at the BSE right now. So this is where the whole story is panning out in India actually. I know these are statistics. You'll take time to absorb. But the real demographic change is happening in the age bracket of 20 to 30 years and 30 to 40 years. Some statistics if you want to look at pre-COVID era and post-COVID era. Pre-COVID, 32 million investors in India, FY20, if you look at that number. The 32 million to now 121 million, 4x growth. So from 1985 when the index was launched and 1991 onwards when the Indian capital market started opening up, the total number of investors till COVID was only 32 million. That has gone up to 121 million right now. So what is bringing this change is very, very important. You must have heard in your earlier presentations, Indian demographics is a young age population working. We have got the largest number of GCCs in India right now. We have produced something like 1.5 million engineers every year. That is a kind of a statistics which are mind-boggling, which is the size of population of so many countries. That is 4 times, 3 times, 5 times of that is the total new investors who have come into the last 5 years. So this is the real change which is happening in the capital markets. But why it is happening again is very important. A young age population, more risk capability. If their earnings are increasing because of the multiple opportunities in India, which has been because of GCCs and the opportunities to invest in India. But at the same time, the emergence of the fintech players. I touched in very brief about the sandbox which was created for the financial payment space. The sandbox which was created by the capital market regulator for enabling the ease of opening account with the broking firms. Now you can open the account in the broking firm within a zilch of 30 minutes. Everything is online. You don't need to go anywhere. You can just open your mobile app, take a photograph of do a video call. Everything is done in half an hour. That is the kind of the speed of the account opening. That's what you are seeing from 32 million to 121 million. Every month, this is very important statistic to look at. Every month, new 2 million investors are getting added to the Indian capital market ecosystem. So you think about it, 32 million, 30 years, every month we are adding, you can see the numbers which are startling in that case. That is the kind of stuff which we are talking about right now in terms of growth which is happening. And age bracket, again, age bracket is very, very important to monitor here. What we talked about is the age bracket is typically, while we were young, we used to start putting money into capital markets after the age of 40 years or after the 30 years. Typically, that used to be the age bracket when we started after saving some money for basic savings and then going into the buying some house and then, or we purchase a car or something and then go to the house. That used to be the typical graduation of our savings which used to happen. But the change in the approach is capital market is becoming the first love for the new age people. So there is a tendency to take a bit of a risk towards, and they know that the opportunity compared to the putting money in the bank, compared to that in that case, the capital markets post-COVID, Indian capital markets have really performed in that sense, except the last 1 year where the market consolidation has happened. But in terms of CAGR returns, if you want to look at that number, I'm sure the previous panel must have given you that kind of a numbers. So these are numbers, real startling numbers. The kind of flow of the money, again, mutual fund SIP money, $3 billion worth of money which is coming every month. And that is growing month on month. Systematically, it's growing month on month. And the role played by the exchange, in particularly, I've talked about it, more than 88% of the flow is coming through the BSE Star Mutual Fund platform on that side. So these are the numbers. One is, these numbers are directly only because of the capital markets which is there currently. They're coming directly to the broking arms. These are not the mutual fund numbers. The number of mutual fund investors right now is just 50% of that. There's much more longer penetration in terms of the wealth management firms which are yet to service this kind of investors when they start reaching out to everybody in this market. So these are some of the background about the capital markets stuff. But very importantly is like say what is happening in terms of the changes which are happening in the Indian capital market ecosystem. Very importantly is with the kind of a fast-paced growth what we observed till now, it's very important to have a very, very strong regulatory framework it's very, very important to keep on evolving with the changing demand of the capital market ecosystem. I'm not sure how many of people really track about the kind of capital market changes which are getting evolved with the changing times, but I would like to touch base upon a couple of things which has been the demand by the lot of foreign portfolio investors in particularly, because we as exchange deal with all the foreign portfolio investors coming to India. We also deal with the foreign institutional broking outfits plus all the institutional outfits in India, which can keep on improving the ease of access to India. I'm sure from the asset management side, what we realize is with the multiple structure which got evolved in the AIF structures over here in India, with the multiple changes which are happening and based on the taxation requirement, clarity in terms of holding patterns, those keep on changing and keep on evolving with the market feedback. But very importantly, couple of important things which is also affecting the exchange ecosystem and the post-trade execution ecosystem, which became the very important part of stuff. So based on the lot of feedback which was collected, one of the important requirements which was asked by all the global investors was post-trade ease of common contract node. So what is common contract node if some of you guys are not really aware about that? Globally, to benchmark with the multiple exchanges operating in one single capital market ecosystem, you don't require two prices of the same stock which you bought in two different exchanges. You want a single executed price on your contract node is a volume weighted average price on two multiple exchanges, so that you don't need to track how much I bought in one scheme, how much I bought in other scheme. I bought that stock in multiple exchanges based on the best price execution. I need to do that. This was a very important change in the market microstructure. Why I'm saying that is, there's got some reason to that. So interestingly, now I'll take you to the real microstructure, what is happening on the BSE per se. Bombay Stock Exchange, you saw Mr. Ramamurthy. I'll take a 1 minute to give his background. He's 40 years into the capital markets, one of the early founding members of the National Stock Exchange, which is an exchange. After spending almost more than 30 years there, or 25, 28 years there, he moved to Bank of America as a country head and a chief operating officer. Post that, he was selected by the regulator to come and head the exchange, which is from January 2023. So interestingly, Indian capital market has a very large portion of the business which happens on the derivatives market. And derivatives constitutes a very important part of the overall capital market ecosystem. So while joining, he realized you need to go to market and understand where does the BSE lack currently at this stage in terms of the capital markets. So one of the consensus feedback which came from the market was derivatives was the one area which BSE needs to focus on, and weekly derivatives contract, which is very, very popular in Indian markets, not in Indian markets. US markets is more popular, is the daily expiry of the options, and South Korea has got a 3 times in a day options expire. So there are multiple innovation of instruments which has been happening in the past, but weekly derivatives contracts were very, very popular already at that time in January 2023. In May, we rolled out our flagship contract, 1985, while you saw on the AV. Mr. Sundar mentioned it's the first index of the Indian capital markets, and being the flagship index of the BSE, we launched the Sensex derivative contract in 2023, in May 2023, 15th May 2023. And just to share with you, in the span of 2 years, that contract became the fastest contract growing anywhere in the world. It's the second largest contract traded anywhere in the world now, in terms of number of contract traded, because the contract size is small. But at the same time, the speed of growth, what I'm talking about is, that's the kind of a growth which is happening. I touched base upon the technology. We're at 100 million orders in a day to what I'm talking about 18 billion orders in a day. We can handle that. Already we are receiving 8 billion orders in a day right now. So these are the structural change which is happening. Vast structural change is there because of that. So interestingly, you talk about the global players. High frequency trading, my background was also discussed on the high frequency trading. High frequency trading is becoming the very, very important part of the market liquidity program. Whether we like it or not, US, more than 75% of the liquidity is provided by the high frequency trading firms. So is the India now. You name the global high frequency trading firm, all have got set up a shop in India now. You name the Citadels of the world, Jump of the world, Tower, You name the IMCs, Optivus, everybody's in India now with the large local shops as a prop trading firms with the 150 to 200 member team. That is what is happening, shifting the shape in India in terms of the change in the overall structure of the market. Why they're setting up shop in India? 2, 3 reasons particularly. A, talent pool in India is evolved. I already talked about 1.5 million engineers in a year, but there are so many good colleges, engineering colleges in India, which are far superior than the best of the global universities placed anywhere. They are able to get the best talent from India, for India, and also for the global markets. So they are able to get a good talent pool available in India. At the same time, by setting up a shop in India, they can trade intraday cash equity markets. By being as a foreign portfolio investor, you cannot buy or sell the cash equities in a day. You can only buy or sell, but the same stock you can't buy or sell throughout the day. By being a local, by taking a membership of the exchanges, you can do intraday buying, selling, and become a market maker on the exchange. That is what is the biggest market microstructure change which is happening on the BSE platform right now. All these big names, some of the names which I mentioned, these names are not confidential because all are the members of the exchange, and that list is available onto our website as well. So interesting part what we observed in terms of change in the approach, all these firms, while they built up I talked about the co-location. On the co-location side, everybody is present right now to utilize that infrastructure for trading onto the derivatives and also for the cash equities. They started building up the BSE's cash market book. So the change in the approach is BSE cash book, which was not being looked upon by the global investors in the past. A, because common contract note was not there and the order book was not there. So it's like chicken egg situation, whether common contract note will come first or order book will start improving. But because of the derivative success, they took the membership of the BSE. They started doing a market making at BSE and NSE and started arbitrage between the two exchanges. And hence the volume started picking up for us. So this is one part which is very, very important part, which is important for markets to absorb and see the stuff. That's why smart order routing started emerging. Whichever exchange has got the best price, that order flows there. This change happened from 27th of June. In the first month itself, we saw 185 foreign portfolio investors started using this kind of facility to get the best price execution for the orders. Then you go back to the change there are a lot of regulatory changes which happened in terms of, because we talked about the exponential growth of the derivatives market. A regulator wanted to bring in terms of a sanctity to that. Multiple regulatory guardrails were brought in terms of changing the expiry days. While I talked about being a Friday as one of the days which became the expiry, we got to Tuesday, and latest we are on Thursdays. So there is a change in the approach, structural change in the things which are happening at a overall derivatives framework. Maybe we can discuss later on that as well while we discuss one-to-one. So there is something which is very important which is happening currently in terms of the putting the guardrails so that this exponential growth which was happening in the options ecosystem globally. Interesting, I was looking at some study at the SPX options, which has started contributing to around 65% of the options trading is happening on the 0 day to expiry. Though these are weekly contracts, the most mature market, most evolved market has moved to a daily and 0 day expiry kind of options trading. So this is something which is not, options is not akin to India. It's also globally, which is the way people have started adopting to that new market conditions. And interestingly, the way focus has started shifting from long term, I remember that long term used to be 5 to 10 years in the past, and that long term definition has been changing, and short term definition has been changing to weeklies and monthlies, and things have moved to microseconds and nanoseconds now. And that is the way technology has changed the overall approach towards the trading or the investing phenomena. And that's very, very important part of the structural change what we have. So we are already aligned to the global markets in terms of the technology stack. We are advanced in terms of the much more technology stack for the attracting the new investors into the capital market ecosystem with the multiple kind of avenues for them to invest. Recently, regulatory guidelines which came for allowing the smaller evolved customer to come through the evolved products, which is the SIFs, which is the new product in the category for the mutual fund, because they can't access the AIFs, which are slightly on the higher bar for them with 100 million rupees. That's something which is 10 million rupees for the AIFs. Here is the 1 million rupee which is being allowed by them, by the regulator, to get some category of product which can be absolute return in place. So things are changing and things are evolving based on the customer segment, customer feedback. Much more products are getting evolved in the Indian capital markets. And as the markets become more and more, we have long headway to make it in terms of the product ideas, in terms of the opportunities which are there. Sorry. So this is something which is, I talked about the equity cash market. In March, we dipped down to 5% kind of a market share, and already touching 9% of the market share. I'd give you a background about why it's happening. All the capital market ecosystem players have started participating onto our markets. But very importantly is the below slide, which is there, is like, say, change in the segmentation which is happening. On the cash equity side, you have the DIs and FIs, which are currently 12% of our volumes right now. This is where we have started inching up currently. But the prominent change we'll see in the next slide. This is where the real story of the BSE began from May 2023 onwards. In derivatives, in the span of 2 years, we already had 48% on the turnover of the contracts. Other exchange having 25 years, we having 2 years. The change which happened in the last 2 years is phenomenal for the overall stuff. More than 550 members are participating on the derivatives contracts right now. Monthly basis, we are getting 1.8 million customers are participating on the monthly basis on a contract. And till now, 8 million investors have already touched base on the derivatives contracts at BSE. So a lot of people keep on asking whether one contract will make the exchange grow. I keep on comparing with the global exchanges where only one index makes the exchange. That's where at exchange level, we have got a multiple streams which we have not touched upon. I already touched on the mutual fund platform, which is trying to drive the overall flow of capital onto the mutual fund. Then we have got multiple lines of businesses. Index business, which is very large focus area for the exchange, where we have launched, it was earlier a 50-50 joint venture between the S&P and BSE. Last year, we bought back that stake from them, 50% stake back from them. And post that, we launched some 30 new indices. For the investors, somebody was talking about passive funds getting tracked in the previous panel. A lot of new indices which you might start looking at that. Some of passives will be there, but at the same time, a lot of indices which are going to be used for benchmarking and generating alpha over that. Many more of them are already being launched right now based on the feedback what we get from the market. So this is where another line of business which is very attractive and which is we are focusing at this is about data business. So we are the generators of so many terabytes of data every day, and the data which is very, very important and integral part of the business for the exchanges is becoming another focus area. Indian markets particularly, I think one of the areas which definitely the investors who have come to India should be knowing is the emergence of the small and medium scale enterprises in India. That platform by the exchanges is becoming the very, very big area of focus currently. That we call as a small and medium scale enterprise platform, SME platform. There we have got more than 600 companies already listed onto the BSE platform. So a lot of entrepreneurs who are coming out with their starting their companies, and they want to come and divest. And out of the 600 companies in the past, we already seen some 100 companies around have already moved to the main board. I'm sorry. So there is a change which is happening in the Indian overall capital market ecosystem, which is very relevant for the people who are looking at Indian markets as an area of focus. So that's 6 slides, but I took a lot of time, I'm sure. Maybe we can discuss anything more.
Thank you so much for your time.
Thank you.